Welcome to this week's Market Update, where we review the key developments that shape markets, highlight what drove our recent performance, and look ahead to events on our radar. Let's start with what moved markets. Stocks originally climbed after June's jobs report, with the unemployment rate improving to 4.2% and hiring settling at a steadier pace, albeit supported by the FIFA World Cup pre-hiring. Investors welcomed that balance as yields moved lower following the report, supporting a more stable outlook for interest rates and letting attention shift back to earnings and long-term growth. For our portfolios, a calmer rate backdrop is constructive for both quality stocks and high-grade bonds. Digging into that jobs report, we saw a relatively healthy labor market moving toward a sustainable pace rather than outright slowing down. Payrolls rose by 57,000, layoffs stayed historically low, and wages grew by a solid 3.5% from a year ago, while sectors like healthcare and manufacturing kept adding jobs. This balance helps ease price pressures while letting growth continue, which is supportive for the quality companies that we hold. Our third story is Microsoft, which announced a new team of about 6,000 employees focusing on helping businesses put AI to work in their daily operations. This is an encouraging shift from early experimentation towards practical, measurable results, and it widens the AI opportunity beyond chip makers into software, cloud, and services. We see this maturing phase of AI as a durable, long-term driver of technology companies that we own. Now let's look at what drove our performance and why we remain confident in our current positioning. Meta Platforms was our top contributor, advancing over 9% as enthusiasm around AI and digital advertising kept building. The company is benefiting from expanding AI capabilities and improving monetization, while disciplined spending and strong earnings momentum support sustained revenue growth. Its leadership in AI innovation positions Meta to capitalize on long-term advertising and engagement trends, which is why we're glad to own it. Consumer discretionary led our performance as investors grew more confident that a healthy jobs market and easing inflation will keep supporting spending. Tesla was a standout, up well over 10%, along with Amazon, reflecting strength in brands with pricing power and strong digital capabilities. We continue to favor high-quality consumer franchises that can grow earnings across a range of conditions. Our size strategy was the week's strongest driver, as large, established companies outpaced smaller peers. Leaders like Tesla, Meta, Alphabet, and Amazon contributed the most, each benefiting from strong balance sheets, durable earnings, and real exposure to AI. While rich valuations call for selectivity, we continue to see investors favor proven large-cap leaders, which supports our positioning. Looking ahead, here are the key events that we're monitoring in the week to come. On Wednesday, commentary from the Federal Reserve will be in focus as officials reaffirm their goal of returning inflation to 2%. Recent weeks have brought some easing in price pressures, and the Fed has emphasized that decisions will follow the incoming data. Clear communication helps set expectations and can influence both stocks and bonds. Thursday brings the US existing home sales. The latest reading showed sales up 3.2% to an annualized 4.17 million, a stronger rebound than was expected with an inventory at a 10-month high. Housing is an important economic driver, so we'll watch whether this positive momentum continues. On Friday, we're going to turn our attention to the Canadian job report. The latest reading was very encouraging, with unemployment rate falling to 6.6% and the economy adding just under 90,000 jobs, which was the strongest monthly gain since December of 2024. A healthy Canadian labor market supports household income and spending, while also reinforcing our confidence in quality domestic holdings. As always, we stay focused on what matters the most, helping you reach your long-term financial goals through disciplined investing and thoughtful portfolio management. Thank you for joining us, and we'll see you next week.